Just when you thought it was safe to wade back in, is there danger lurking in the market's murky waters? Cramer's talking to top technicians and going over the great white charts to help you be the bigger fish in this tape. Don't miss Chart Week, all this week on Mad Money.
Today we say goodbye to a long-standing holding of my charitable trust, Johnson & Johnson. Normally when we sell a stock, it's because something's changed at the company or in its industry, or the stock hits our price target. We don't want to be greedy. We care about chasing profits, but as we teach members of the investing club, which chronicles the moves of the trust and details any trades before the trust makes them, we care far more about containing losses, because when you control your losses, the gains take care of themselves. But we didn't sell J&J because of the fundamentals. This company is one of the best pharma pipelines out there, along with a terrific medical device portfolio. No, we sold the stock because we are tired of being hostage to legal decisions that have little to do with the greatness of this company. Specifically, J&J's neck deep in lawsuits involving its baby powder, and whether its one-time key ingredient, talc, had traces of asbestos in it that might have caused people to get cancer. When these talc lawsuits first exploded, I brought on then-CEO Alex Gorski to Mad Money. And after a considerable amount of research on my own, I came to the conclusion that Johnson & Johnson acted in good faith. At the very least, they didn't know about the asbestos. In fact, I was convinced there might not have been any asbestos to begin with. That was a misjudgment by me. Since then, there have been a seemingly endless number of cases filed against J&J, and while it's won many of them, it's lost some big ones too, including a $2 billion judgment that made me believe I simply wasn't taking the plaintiff's side seriously enough. Fortunately, J&J came up with what I thought was an excellent strategy to pay $8.9 billion to the plaintiffs as part of a North American-wide settlement that would have put this whole thing behind them and, more important, put money into the hands of the claimants immediately. Good for everyone. And many plaintiffs' lawyers agreed. I started feeling hopeful. In the meantime, J&J reported a terrific quarter and spun off its consumer products division as Kenvue, a hugely successful IPO. But really, the charitable trust was betting on litigation, and that's not a game you want to play. In retrospect, I was far too sanguine about J&J's ability to get a settlement that would protect their shareholders from unlimited losses through a novel use of the bankruptcy code. On Friday night, the judge overseeing the faux bankruptcy sided with the plaintiffs against J&J, so the company's once again at the mercy of the lawyers bringing suits for extremely sympathetic individuals. The court ruled that J&J was not in true financial distress, so it didn't have a right to the bankruptcy course that it took. I guess they have to wait until J&J has bled dry before they'll use a common-sense solution. That means the cases will now mount up, and another procession of hard-to-predict verdicts lies ahead. On Friday night, I just had enough with J&J, regardless of my personal beliefs about their culpability. I simply can't have a position that's precarious because of litigation, not because of the fundamentals. This business is hard enough without playing lawsuit roulette with jackpot justice. I don't want to wake up one day and discover that some runaway jury decided J&J's earnings belong not to the shareholders, but to the sick claimants. I've actually seen this happen several times. In situations that were truly pernicious, where the companies were worth condemnation. I don't think J&J is one of them, but so what? It doesn't matter what I think. It matters what the juries think. In the end, I didn't think the ultimate upside, a series of wins by J&J or perhaps a Supreme Court victory down the road, was worth hoping for. Hope should never be a part of the investing equation. Given the nature of our legal system, there's really no telling how bad this could be, which is why we had the charitable trust sell its shares in this great American company. You see, I like betting on businesses, not lawsuits, and the lawyers who gain them. I like to say there's always a bull market somewhere, and I promise to try to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. Last call starts now.